Everyone, I wanted to do a video on the SPY. I want to take a look at today's price action, which was a confirming head and shoulder pattern. I want to take a look at examples of other head and shoulder patterns and do a price projection based on the measured move of a head and shoulder pattern. It's going to be a good video in terms of learning the head and shoulder pattern. We've been talking about a lot of bearish signals on the SPY chart for a week or so now. We've come up with at least four different types of signals that indicated that we would roll over soon. And we did start that on Monday when we had this reversal bar here where it was positive for the day, but at the last hour of the trading day, we had a reversal on big volume. And yesterday, if in my previous videos, I would tell you guys that when you have a big rally like this, you need to expect a follow through, what I call a lightning bolt type pattern, where lightning bolt shoots up and then the lightning bolt pulls back a little bit and then lightning bolt goes up. So these 3 days here, we try to follow through and confirm on this candle bar. And I said that on Monday, I said this was a concern and I really needed to see this one pull up above this candle's high, and we didn't. And when we started rolling over, that's when I sent out a message that we should lighten up positions, take profits, and close positions that look weak. And so we had a confirmation that the market was going to roll over today, and we got this big red candle bar breaking out of this downtrend line. Now, this specific pattern that I'm looking at here is a rising wedge pattern, and it's a bearish pattern, and price moves inside the triangle up to the nose and eventually will break down. Now, I was thinking we might have a couple more bounces inside this triangle before we break down, but it looks like the market is ready to roll over now. But not only this particular pattern, but there were multiple patterns, and another one was the head and shoulder on the daily time frame. And the head and shoulder is a very it's a very accurate bearish pattern that indicates a stock or market is going to move lower. So let me describe again what the head and shoulder pattern is. You have price that moves and forms this swing high pivot here, and this becomes a shoulder. If you imagine this is a person, and it forms a left shoulder, and price goes back down, and then go ahead and make a new high above this price, and then it rallies back down below, and here is the head of the pattern. We call this the head. And then price rallies back up, but not above the head, and then starts going back down. Now, when you see the head and shoulder pattern, the important things to recognize is the neckline. So you connect from the left shoulder to the low, you connect that low with the low between the head and the right shoulder. And when you connect that is, this line is the confirming line for the head and shoulder. You might have a pattern where we could have gone to this day and then suddenly we break above this line, and that would not be a head and shoulder. For example, I thought maybe this area would have been the right shoulder, but then this candle came along to invalidate that, and we had the shoulder move a little bit higher up here, which was where the resistance area was. Now, the break of the neckline is a confirmation of the pattern, and if the shoulder had kept moving into new highs, that would have invalidated the pattern. So you have here a break of the neckline, which was also the break of this rising wedge. So you see how they're patterns that work together and ends up being at the same point. When you have multiple signals, the signal is stronger, it's more effective. So the question is, where where will price go? And for the head and shoulder, we can do a measured move, which is the distance from the neckline to the top here area here, and we can clone this distance, get an exact distance, and then put it on the bottom side. So in this particular case, for this particular head and shoulder, we're looking at 190.153. That's the target price. You might be thinking, well, what does that have anything to do with price movement? How can this line determine where the market is going? You know, that I really can't give you an answer. I just know that I've observed this pattern over and over and over, and it's pretty darn effective in terms of describing what the potential downside is. So I'll show you examples of that. But if we measure the distance from this head to this point here, we are looking at a 21 point drop and about a 10% drop, which would put us into correction mode. And so what happens at this point will be, this area will be of interest. We will take a look at that time to see what happens. So let me take a look at some other head and shoulders. This is also a head and shoulder, and this is from the October meltdown of 2014, which should be fresh in our memory. I put here 2013, but I'm clearly wrong. This should be 2014. In any case, we have here the left shoulder and pull back, and then rising above the left shoulder, forming a head, and then pulling back. And here the shoulder is real small, and patterns are always not so clear cut, but you see here is a bounce off of the line, and then a little minor rally, and then we're going to pull back here, and then finally a break of the line. So you can see here in this particular case, if we measured from the neckline, this is the neckline. If we measure the distance from here to here and copy it down to here, and you take a look going across, you see that you've specified the bottom of this downtrend. And this is one move that fortunately I caught last year. I called this, about 10 days before it actually happened, projecting that the SPY would move to 181 area. And I was literally 2 cents off of the bottom here. So you can see here, when it gets to the bottom, there's huge volume reversal candles, and then we go ahead and move on up. So very effective, this measured move on the head and shoulder. Go ahead here and take a look at Tesla. Again, we have the left shoulder here, the head, the right shoulder. We've got a descending neckline in this particular case, but that doesn't really matter. All we matter is we measure the distance from the head, top of the head, to the neckline, copy that, bring it down over here, and boom, in this area here, what do you see? What you see is, you get a reversal, a bullish engulfing candle, and it rallies a little bit, but ultimately it will continue lower, as we have seen. But it has caught a majority of this move here, this measured move. So a measured move is definitely an area of interest. It's not exactly, if you're shorting, it's not an area where you automatically cover, although you might cover some of your position, and then you might have an opportunity to reshort again here. However, when it gets to this area, you got to definitely pay attention. If you see this bullish candle, you might want to just cover all your position or take action. So that's why I say technicals is a guide. When you get to your signal, you got to pay attention to see what the chart is telling you is going to happen next. Again, another one that I picked out, another chart here, is Apple. And if you take a look at this here, you got the left shoulder here, the head, the right shoulder, and also a descending slope line. Measure the distance and bring it down, and bring it right down here, And guess what? This looks like a bottom. You get a rally right off of that bottom. You get a huge volume here and huge buying volume here. And then you get a low, a higher low, and boom, you would have caught the bottom of Apple. And then finally, Netflix. I like to pick these stocks because everyone knows the names and they love to, see the patterns work on a familiar name. A lot of times you might see it on some weird stock you've never heard of before, but these patterns work on every stock in every sector and whatnot. So in any case, here's Netflix chart. You've got the left shoulder head and the right shoulder, and then you got a break of the neckline here. You do a measured move here, and you get a measured distance here. And in this particular case, you see here the massive amount of volume around this area compared to here previously. You obviously have the gap here, but you see here there's obviously a lot of action going on here, and probably some bulls were using the measured move and saying, hey, we might get a bounce here, but the move down was just too strong, and Netflix continued moving lower. So an example of where the measured move is not a measure of the exact bottom, but definitely a signal area where something significant might happen and you need to pay attention. Now, we don't see any candlesticks that are reversals. We see another big down day, and little bit consolidation before we head down some more. So that's the effectiveness of the head and shoulder pattern. So when we look at this chart here of the SPY, even though it looks so unlikely that price would drop this low below this here, anything is possible in the market. You have to keep an open mind. A 10% correction in the market is not unusual. We've been living through a very strong bull market, one that probably only happens once every 10 or 20 years, and we're not used to pulling back like this. But that's pretty common in the marketplace. 20% corrections are common. The ultra bearish signal I talked about in the other videos has a minimum of a 20% pullback. So it's something very significant. So what kind of action can you take off of this information? Are you going to go ahead tomorrow and go ahead and short the market, thinking it's going to drop in 5 days to 191? Well, it could, but most likely it won't. Let's take a look at some of the previous examples here. So in this example of the SPY, yes, the market literally drops pretty much straight down to 181. We had one up day from the break of the neckline. We had one up day and two big ones before we start reversing. So literally in this particular case, it does drop straight down. So that is a possible action. Let's take a look at this one on Tesla. On Tesla, we have the break of the neckline here, and we had a retest of the line right here a couple of days later, 5-6 days later. We had a break of the neckline, we have a retest of the line, and we actually get a big rejection of the retest, and then we go up and up and up and up and up. And you might think, oh my God, this pattern doesn't work out. Well, the signal is set here. The signal is set that we're going to head down this direction. And the only way that signal turns off is we have something which invalidates the signal. And usually that something that invalidates something else is a newer high. So if you take a look at the right shoulder here, you see that the high is in this range right here. And let me just reformat this for you. I'm just going to put that as a trend line. Okay. So if you had gone, all in and shorted Tesla, you would have been burned, because here you would have been, it was rallying, a lot of dip buyers here, whatnot. But the opportunity to short is to watch to see, if it retakes this high, if it looks like it's going to start making a pivot high, a swing pivot high, then that's a good shorting opportunity. Here, on this rejection bar, would have been also a good shorting opportunity. Now, clearly, this would have been a wrong time looking back in the past. Of course, you wouldn't know that at the moment. So it would have been a legitimate time to short here when the line was retested and it looks like it was going to fail. But again, you would have, if you were shorting, you would have put your stop here, keep it real tight, and you would have been knocked out here. And you would have probably kept on looking for more opportunities to short. Now, as long as it doesn't break this high, this signal from the head and shoulder is in effect. So tomorrow when the market opens and it goes down a day, don't go all out and start shorting like crazy. You might want to scale in, start shorting 1/3 of your position once it goes back above the line, and then you look for a candlestick pattern that suggests that it's going to go back down. You can short another third of your position, and then when it actually breaks this low, you can short another third of your position. So even though the pattern is there, it doesn't mean it's going to go straight down. Sometimes it does, sometimes it doesn't. Here again, we have Apple. Same thing. The signal is triggered around this area here, this gap down here. But you see, we do have a rally, but this rally is much weaker than the Tesla rally, and we definitely do not have a new high here. If you look at this particular candle pattern, you have weakness here, you have a gap up weakness, and then right here on this day would have been a good short because it gapped down. And then let's take a look at the Netflix one. Again, the same thing. We have a breach of the line followed by a few days of hesitation, retesting, making sure this is legitimately a break of the head and shoulders. Again, we have a rally, but still lower than this high, and we have two candle bars suggesting a reversal. You got like I said, if it's a weak stock within 1 or 2, 3 days, you'll find out if it's going to make a swing pivot high. So this would have been a good shorting or a gap on the gap down. So that's just, I show you these charts so you can see the range of possible action on the price. Now I've taken profit, I've closed positions. I'm not going to reopen it just because, the market maybe starts to rally a little bit. It's very important that the rally is believable before you go ahead and get back into the market. Now, a lot of you guys may be asking, what can I buy now? What can I buy now? You just need to have patience and wait for the right setup in the right market conditions to get you going, giving you a higher chance of success. So, I don't want to say everyone start buying puts. That's one way to play it. But puts are long options, and if this thing rallies up and takes its time to go down, time decay will eat into your profits. If you want to short, you want to keep this as a stop here. So you have to calculate your position size so that you don't get shaken out too early because you're taking a big loss when it pulls back close up to this right shoulder over here. So it's something to think about. We can expect, people are asking what's going to happen tomorrow. Well, it can go straight down, or it can just hang out here for a few days and retest this line and even re-enter this line and then roll back over lower again. So just, if we get an up day here and it closes back in above this line, don't get into stocks. Don't buy stocks yet. Don't get trapped. It's a bull. It could be a bull trap. So don't get trapped. This right now, in order for me to not be bearish in the market, we have to either have a really solid candlestick, maybe like one that goes all the way up here and breaks this high tomorrow, uh, which I doubt given the fact that, Saudi Arabia is going to war now. Who knows what, but um, you know, if we head lower here, we see huge volume sell off, and then we see a reversal candle. I might change my sentiment to bullish. But if it's just a update, a small update, it's no big deal. This is where the trader has to be patient. The trader has to be patient for the pattern to work itself out. So the target is 191.53. That's where we want to be, and then that's kind of where we want to look for a reversal. Anywhere else in between, you want to look for a short here, but once we get down to this level, don't start thinking about short. Your opportunity to short is going to be in this area right here. Okay, and the closer you are to this area, the higher chance of success you're going to be, because your stops will minimize your risk, because once it goes above this price, you should stop shorting the market or shorting the SPY. So that's just something that you want to think about. Okay, so not all signals are automatic. You have to do something. You still have to use your brain, look at the chart, and then find the most opportune time to short. This was just the signal. This was just the beginning. So anything can happen. So hope this video was educational and kind of give you an idea where the market is going. If you like my videos and find them informative, please click on the like button and also click on the subscribe button so that you can get updates on videos that I do in the future. So thank you for listening. That's it.